Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Super excited for today's episode number 95. Joining me, you can find him on Twitter at tmackwolf. Please go ahead and give yourself an introduction.
Good morning. Thanks for having me.
Yeah, thanks for being here. So yeah, just go ahead and give yourself an introduction, sort of whatever you would like to say about yourself and maybe where you're located or what got you into investing, and we'll just go from there and see where the conversation takes us.
Yeah, so I go by tmackwolf, and it's my Twitter handle that I started just kind of sharing my obsession for my favorite college football teams, this college that I also attended, the Wolfpack. So based just outside of Raleigh, North Carolina. And, on Twitter, I basically discuss two things, and it's my love for NC State football and my love for passive income and investing and, chasing financial freedom. And it's the two biggest passions outside of my family that I really have just an obsession for, I think.
Right. That's awesome. Yeah, so being Canadian, I don't know a lot about American college football, but I can
Mhm.
definitely have hopefully a really great conversation with you about passive income and investing and dividends and any other types of passive income you may be into.
Yeah, it's a lot of fun. We're about 4 weeks away from the season kicking off, and I have season tickets, and so every weekend that's pretty much what I spend the majority of my Saturdays, especially doing, is
Right.
attending and then watching tailgating. So like the culture around college football in the South, where I am on the East Coast, it's the way our stadium is set up. There's a lot of acreage around it, and like at least 6 hours before kickoff, fans start showing up in the parking lots, and they have barbecue, and they have Bojangles chicken, which is really popular around in this part of the country. And it's a full day event whenever you go to a game. 3.5 hours in the stadium, but probably 6 hours outside before, and then time afterwards too. So
Yeah.
it's a big thing.
Yeah, wow, sounds like a lot of fun.
Yeah, it is.
So let's get into the investing journey, sort of where that started and what it looks like, what it looked like back then, what it looks like now, how long you've been into the investing game.
Okay. So I really didn't start paying attention to investing until about, I don't know, I kind of got in at a bad time. I'd been hearing about GameStop and AMC, and that's about the time I started, was like early 2021. And so it's more or less at the peak. I started at like the height, and then had a lot of pain for a while as I'm trying to teach myself, and I'm trying to find good resources and learning and reading about it, and trying to find people like within my circle that were already investing. And I just didn't really have a lot of that. So I've been kind of going at it alone this whole time, and kind of trying to follow trends. And I did that for about a year, really. Like throughout 2021, I was pretty much chasing all these things that I was hearing other people talk about. Um,
And that's a
and
bad trap to get into.
yeah, it was painful. I'm still, in some ways, I'm still trying to dig myself out of some of those holes, and hoping I can recoup some of those, unrealized losses that I have. But um, I've been able to still, like, with consistency and investing every week. My portfolio has still grown tremendously, but
That's good.
I'm still trying to, hope that I can still get back some of those that I lost. But after dealing with that pretty much through 2021, started 2022 with a, you know, determination to like reset my mind on what my process was going to be, and what I wanted my portfolio to look like. And so I stopped trying to find something that was going to make me really rich really quick, and just
Right.
started to look for slower, consistent gains and became kind of infatuated with the idea of compound interest and what that looks like long term, because I knew that I had a long term mindset. A lot of the people that that I was communicating with about investing then, they had kind of had their portfolios grow a lot during that period, whether through options or investing on margin and things like that. So I was kind of trying to do that as well, but not options trading or anything. But I wanted my portfolio to grow quickly.
Right.
And but then, when the market turned and went into this bear market, they lost everything. Like they have completely dissolved their portfolios doing it that way too. So that kind of made me, really focus more on especially dividends. I've been kind of really curious about dividends and what that looks like over time and how the payments can just snowball and get bigger and bigger. And so through 2022 and then even more so into 2023, that became my main approach for what I was wanting to do. And, I briefly share on Twitter or X, and whatever the new name of it is now.
Yeah.
I'm going to refer to it as Twitter.
I think most of us will for a long time.
Yeah. So um, I'll share a little bit there. I have a very small amount of followers, so it impresses me whenever it ends up getting like 10,000 views or something, because I only have like 300 followers. So,
Yeah.
but I'll share a little bit about my past where I had when I was younger, I was just you know, kind of wild, kind of doing things I wasn't really supposed to do. And it led me to be incarcerated for about 7 years. I dealt with a back injury from an ATV accident, and that was in like 2008. And that led me down a road of prescription pain pill addiction for about 5 years. That culminated in October of 2013 with me going to prison for what ended up being almost 7 years. So I got out in 2020 in the middle of COVID. And so the whole landscape of the country was different already.
Right.
And it's being gone for 7 years is already like you're going to go through a pretty major transition anyhow. And then I come out and everything is, we're shut down and all these restrictions on travel and things like that. And so um, it ended up being like one of the best things that could have happened to me at that time, because it forced me to like grow up. I was in my late 20s when I went to prison. So I get out, I'm in my mid 30s, and I had to do a lot of growing up, facing that on my own. And but what I had learned while I was there was a lot of disciplines, a lot of ways to really focus on myself and focus on where I wanted my life to go and where it had been and how to make those changes. And so you find a lot of disciplines where, with your diet, with fitness, with spiritual journeys, and, trying to seek God or your higher power. And people are going to Alcoholics Anonymous and Narcotics Anonymous, and you're limited on what you can do, but you find ways to become disciplined. And there was a limited amount of college courses that you could attend while you were there. And ironically, so I have about, I think, 12 or 15 hours that I received from a college, which just happens to be my favorite team's biggest rival, is the college that I attended while I was in prison. So my family always thought that was funny.
Ironic.
Yeah, and I would always joke with the professors and say, I never did this well when I was going to NC State. It must mean y'all's classes are so much easier to do. And but in reality, it's because I was just much more focused on what I had going on
Right.
at that time. So um, that's all. It's fun to joke about it. But, during that time too, I mean, even especially right before I got out in 2020, the market had crashed with COVID, and then it had bounced and started this long recovery, as, you know, we all saw what it did in 2020. So I got out with like, I had a little bit of a nest egg kind of waiting on me at that point, and just due to some like circumstances that were out of my control, I no longer had that security when I got out, and so I had to start over completely. And I was able to have what's called a work release job the last couple years of my sentence, and I was making minimum wage doing landscaping at a golf course, and but it was a really good opportunity. I stayed on there when I got out to at least have some security and something that I was already comfortable with, and that's around the time that I started to try to, invest and figure out a way, because I just knew, like, I look at these guys that I worked with, and they were great guys, but they were all, some of them almost twice my age, and they're working a job that is, they'd been at for 15 years, and they're only making just a dollar or two more per hour than I was, and
Right.
doesn't, like, they don't really have any other prospects. And a lot of the guys too were, they were immigrants, so they came over from Mexico. They're working landscaping, and they didn't really have a lot of other opportunities for them because of their citizenship. And so they were kind of going to be stuck in this. And I'm looking at their situation, and I just see, like, because of my background too, now I'm kind of at a disadvantage. I don't know if employers will hire me because of my background. And so I
Right.
just knew I really needed to take ownership of that and figure out ways to try to lift myself out of that. And I've jumped into different careers since then and been able to increase, my income, and while still investing and trying to do that too and planning for the future. And I think I didn't have that type of discipline before I went. I was just kind of, I didn't really have a lot of direction at that point in my life. I was just immature in a lot of ways. And I think that going through what I did forced me to take ownership, and learning or trying to begin the process of teaching myself how to invest was a big, a big thing that started at that point.
Yeah, wow. So let me just jump in here. First, I want to just say thank you so much for sharing so much of that background and that story.
Hmm.
Um, Obviously, a horrible position to be in, with that injury. And I've heard so many people with that similar story of becoming addicted to the painkiller pills, and then when the prescription runs out, you're looking for them illegally, and then
Hmm.
you end up in a place you don't want to be. And 7 years is, it's not your entire life, but that's a pretty big chunk out of your life,
It
right? seven
was,
years
yeah.
is a fairly long time. So again, thank you just for sharing so much of that part of your background with the audience, with me.
Yeah, for sure.
And then I kind of want to go back right to the 2020, the meme stock era of GameStop and AMC. And so many people, sounds like you were one of them, so many people got caught at the top, right? Like,
Hmm.
these stocks have been talked up on Reddit and everywhere, and th- they were really, you know, way above their valuation just because they were a meme stock. Still are, I guess, a meme stock to this day. And so yeah, a lot of people bought at the top, and then here you are, 3 years later, still holding the bag, hoping to. You
Yeah.
mentioned unrealized losses, so it sounds like you haven't sold. So you're just kind of hoping maybe they bounce back to
Yeah, I'm not
somewhere where.
proud of it either. I'm not.
Yeah, well, hey, no judgment here, because
Yeah.
I've made plenty of mistakes along the way too in my investing journey, and that's how we all get to where we are, is by learning from those mistakes, right?
Yeah, that's really diamond hands though. You two years later, you're still holding the bag. That's you've got it in here to be able to hold long term. You hope the rest of them are winners that you're holding
Right,
that long.
right. And then you mentioned that shift around, sounded like the beginning of 2022, where you started to learn more and think more about, like, see, my shirt here says dividends,
Mm-hmm.
and you mentioned, compound interest, compound growth, and being able to reinvest dividends, and watching that snowball grow. So I guess, sort of, what is that starting to look like for you now, or since the beginning of 2022? Just, still focusing on some of those, um, probably stronger companies.
Yeah, it's I make a joke about it too. Is that 10 years ago, I was buying prescription drugs. Now I'm buying prescription drug companies and they're
Right.
paying me, So I'm like, I'm gonna try and turn it around on them a little bit. So, I've tried to identify like the companies that I feel like, and I'm having to try to teach myself some of the analytics that I need to know to analyze these things. I found some good apps that help me, like point me in the good direction, and then just kind of evaluating some of the PE ratios, payout ratios, expense ratios for ETFs, and little things that I'm learning along the way. So I'm still really new into um, trying to be able to analyze this well and find something at fair value, or even a better deal. But um, and it's like everybody says, the growth is always really small at first, and it's not very impressive. And so
Yeah.
you don't, especially when you're comparing it to people who were all, they're trading on margin, or they're options traders, or they're day trading, and the payout. Because I tried to experiment with some of that too, and it was so much stress involved in that, and having to try to pay attention to it while I'm also trying to work. And then that's pulling me away from that. And so it really just became like a lot of those same principles as far as the technical analysis and things when I'm trying to find a good entry point, or where a buy range may be for me. It still applies, but it's just like at a much slower speed. And I don't have to worry about if I miss my entry, I'm out or getting kicked out from a stop loss or anything like that. When it goes down, if I already have the idea that I'm going to just accumulate as many as I can, then if it goes down, even better. If it stays the same, then that's fine too. It's still in the range. So it's just made it a little less stressful for me in that way.
Yeah,
But
for
it does
sure.
still, I even had a friend of mine like tell me, I just don't understand why you're doing it like that, because a 5% dividend just doesn't seem that impressive. And at first it's not, but it comes with so much less risk. And then, these same people that are saying this have blown up their accounts because they were taking on so much more risk. And so,
Right.
I'm like, yeah, it's not, you know,
It's not as sexy at first when
it's
you
not, it's
like at
not
first some of those options traders and you see them posting, "Oh, I made 1,000 or $2,000 today." And and then the dividend investors who have been around for, doing it for 10, 15, 20 years, and you see them posting, "Oh, I made 5 grand in dividends this month." And I'm like,
right.
which one is less stressful, right?
Right,
Like,
exactly. And that was really the main thing, you know, that really like confirmed it for me that this was going to be a better way. Like I felt better. I wasn't having to wake up at 4 o'clock in the morning and check and see if anything crazy was happening on days where something was supposed to get news, and you know, having it run pre-market before I can do anything about it, or
right.
whatever. So it just, but at first the dividends are not a lot of money. It's a
No, and
few
we talk
bucks.
about that a lot here on the Passive Income Podcast, where you see people posting, and it's a great community on Twitter slash
It
X,
is.
where people say, I made 10 cents or 25 cents or 50 cents on my first ever dividend payment, and the support is amazing, where people
It
are
really
going, "That's
is.
awesome, that's great, keep with it, that 50 cents will turn into a dollar, into $2, into 5, into 10, and so on," right? So,
Right.
and you did mention earlier too that like more of that long-term mindset, which is very essential for the dividend investing strategy.
Right. And I agree with you. The community that I've met there has been really encouraging. And it's funny because I share a lot more, for like a lot more details of my investing journey with people on Twitter that I've never met and probably never will in person
Right.
than I do with my fiance or my family. Or I share little things with them, but they don't get excited about it like I do. So
Yeah.
it just, and I have people that I know their accounts are much larger than mine, and I make a joke that I'm chasing you, like I'm chasing you for this. And you know and and everybody's encouraging. They're like, come on.
Yeah.
And then I have the same people now, or not the same people, but people that are similar, that are telling me like, oh man, I wish I could get to the point that your account's at now,
Yeah.
and so that encourages me, and I want to do the same thing. Like, well, come on,
Keep
keep
coming.
climbing.
Come
Yeah,
after me. Get your account up to where mine is.
right,
Yeah.
right. So I set small goals for myself, to try to achieve, a certain position size, and then maybe I'll stop there and start trying to focus on a different position and load that one up and just keep trying to find a way to just keep adding and good entry points.
I'm pretty curious what your portfolio looks like now. So you mentioned buying a big pharma company. So
Mhm.
let's start there. What big pharma do you have in your portfolio?
I have Pfizer and Johnson & Johnson.
Yeah, and those are both strong dividend payers, if I'm not mistaken.
Yeah, they are. Pfizer's really been beaten up. Even some of the healthcare stocks have kind of done well here lately, but Pfizer has not. So it has been beaten down.
Yeah.
So I still think it's going to be. I think it'll be around for a while. So I'm trying to use this as a place to really accumulate a good amount of shares.
Yeah, for sure. I don't see Pfizer or Johnson and Johnson going anywhere anytime soon. So as a long term investment, you just buy and hold, or keep accumulating, keep dollar cost averaging,
Right.
and there you go. Right.
Yeah.
Um, what other sectors do you have in your portfolio? Any REITs? Any energy? Any
I have
telecoms?
yeah, I have some REITs. I have Vici. So VICI is one of my favorite ones, and of course, Realty Income is one of my favorites right now. I have some ETFs. So a lot of it's funny. I don't know. Maybe it's just the algorithm kicking me this stuff, but like I'll do some research and I'll find stocks. So one of the first stocks or first ETFs was the Schwab dividend, so SCHD. I found it early in 2022 and started looking at it, and you know bought a couple shares, so nothing major, and it's gone down since then too. But it's pretty popular on Twitter, so
Yeah.
it's gotten a lot of attention, and that was before I even started, really looking into the Twitter FinTwit community to really hear about it. So
Yeah.
a lot of times it seems like, I'm sure part of it is the algorithm, but you find a lot of people investing in the same stocks. Like, they're pretty common.
It feels like every episode I'm giving a shout out to Craig. Do you follow at SCHD Stan on Twitter?
Yes, I do. Yes.
Yeah, it feels like every episode because everybody comes on and talks about SCHD, and I always mention him because he posts about it daily, and he posts like whether it's up, down, whatever, and
Hmm.
so it's just kind of amazing content that he's following that so closely, and everybody can just kind of piggyback off
Right.
of his research, basically, right?
Yeah. I've met a lot of people on there that I've started following that I've learned a good bit just from scrolling through Twitter
Right.
and listening to some of the newsletters that people put out, or just the things they share. And it's been really helpful to, find other things to look at when I'm trying to analyze a stock. Cause like I said, I have a long ways to go to learn, you know,
Yeah.
continuously to get to where I want to be. So,
Well, I think you're setting yourself up for a much better future, that's for sure.
right.
You mentioned Vici as well, which is another relatively popular one in the
Mm-hmm.
DivTwit, FinTwit community. That's the one that has the real estate that owns basically the Las Vegas Strip, right? So,
Exactly.
and you just don't bet against Vegas,
Right.
So, um, I
Yeah,
think
that
that's
was,
a good one too. Honestly, I don't know much about it. All I know about it is a lot of people come on here as guests and talk about it. So I've just learned from other people coming on here and telling me about it.
yeah, it's pretty interesting. I really want to try to take a trip to Vegas to go actually, see in person for the first time
Yeah.
some of these properties that they own. So it's uh it's another one that I'd found early 2022, so way before Twitter, and I just thought it seemed interesting. I figured, people, it's one of those things. Some don't like it, but another example I think would be ticker MO Altria. It's a tobacco company, so some people have strong feelings about not investing in things that
Right.
are vices for people. I grew up in North Carolina. Literally, where I live is referred to as Tobacco Road.
Right.
So, here in the Triangle with Duke, North Carolina, and NC State, that's the rivalry there. It's called Tobacco Road, and just because
There's
so much
tobacco fields
tobacco was
there.
grown, yeah.
Yeah.
So I don't partake in tobacco. I think it's kind of a disgusting habit personally. I don't really care, but um, I'm I like the company. I like that. You
You have
know,
nothing against investing in it. No moral dilemma,
no,
basically.
no, I don't. And I mean, some of the most dedicated people I know are you know people that use tobacco, rain or shine. They're going to go chase their vice, and I think Las Vegas is a similar thing with gambling, and people are going to
Definitely.
chase their vice no matter what the economy looks like. And I just think there's an opportunity there.
And then let's just circle back to realty income as well, ticker symbol O. I want to say 98 to 99% of American guests and even some Canadian guests I've had on here hold realty income in their portfolio. So definitely one of the most popular REITs. It's a
It is.
monthly payer as well, and it
Mm,
raises its dividend by a little bit I think it's every quarter. So it raises by a minuscule amount, but still a raise is a raise. And if
right.
it's raising every 3 months, then over time, year over year, that's gonna grow.
It is. Yeah, it's definitely a popular one. So, they're really diversified within their own portfolio there too, and really solid companies, and trying to expand. And so, I've been trying to teach myself a little bit about that, but I just felt like they were, one that I'd been interested in for a while too, even before I started dividend investing. I heard about it. I don't know. I don't really know if there's a major difference in, receiving monthly or quarterly, and if that really affects it much down the road for compounding growth. But it's it's nice receiving payments every month too.
Yeah, so here's what I've said about that in the past is like, 5% is 5%, whether you receive that quarterly or monthly, right? Because it's 5%
Mhm.
annualized. But there's just something really nice psychologically about seeing that money show up in your account every month.
It
That's
is.
and and to me, that's the biggest difference is just seeing whether it's $5, $10, 20, 50, whatever it is, just
Right.
seeing that pop up in your account on the say the 15th or the 17th every month, and there it
Mm.
is, right? Just
Right.
show me the money, cash on hand.
Yeah. And then you can, just go ahead and start dripping or put it into something else. So it is nice to get that payment, and especially to fantasize about what does this look like? What will this payment look like 5 years from now if you keep consistently doing it, or 10 years from now?
Right.
And
You keep dripping back in plus dollar cost averaging into whether it's realty income or SEHD or Vici or anything else that you might have in your portfolio. If you keep accumulating more, the dividends are just going to keep growing,
right,
barring any dividend cuts, obviously. But
right.
any other sector that I mentioned telecoms? Any thoughts on AT&T or Verizon? I know those are sometimes popular ones with some people in the U.S.
Yeah, I've owned each of them. I had a decent size uh position in Verizon here recently, and I cut it down by about 2/3, right before it dropped below my average here recently, and it's been pretty consistently below where my average was since then. Um, and with AT&T, I've kind of, the first time I invested in it, it was before they cut their dividend, and so I really liked it, and then it cut its dividend, it dropped, and I kind of sold for a small loss, and I've kind of had it as a swing trade a couple times since then. Like I'll buy in when it gets down to around $14, and then it's bounced back up, above 20, and then come back down, and I've really had this, like, I don't it's like a toxic relationship with AT&T a little bit, but
Yeah.
it hasn't burned me, so I've got to be careful, like, because I've actually made money off of it several times since that initial small loss. So I keep wanting to jump back in when it gets low, and try to play it again. And I don't know, it's the sentiment has really been poor towards both of those companies, and so I'm trying to tell myself, like you don't have to buy AT&T. Like you can find other stocks that you don't have to worry about as much. So that's what I've been doing. I'm not trying to touch it right now, but I still want to. Like I watch it, I pay attention to it. I have it on my watch list, but I'm really trying to not do it.
Not get sucked in by AT&T.
Yeah, I don't know what it is. It's just like an unhealthy relationship I have with it. Just so.
The swing trades sound all right though. If you know it's going to kind of go down to 14 or 15 and then come back up to 19 or 20. Hey, if you can take a little profit here and there, nothing
Yeah.
wrong with that.
Yeah, I don't know. I don't want to get caught holding that bag either. So
Right.
anytime I do it, I keep it pretty small now for that, but it's it is something that I'm just trying to be careful with, and I'm trying to manage that. That's one of the things that I think I'm trying to get better at now is managing my emotions with it and managing um when I decide to actually buy something and trying to wait, like even with Pfizer, Pfizer, I'd been watching it since the mid 50s and then it dropped down into the low 40s. And that's when I decided I was going to make my entry point, knowing it probably could have gone down into the mid 30s, which it did. So now I'm still kind of kicking myself a little bit that I didn't wait just a little longer. But again, I also don't mind accumulating shares as it, anywhere under $40 really, but especially under 36.
And that's another one with that long-term mindset. In 20 years, are you going to remember or care if you bought one or two or 10 shares at $36 instead of $41 or whatever the
Right.
numbers might be, right? So
Right. Yeah, that's the way I try to look at it too. So it's it's getting better. It's a process to you know, try to get there. So another sector I'm trying to learn to, where you look at which sectors have been beaten up and then try to start making some purchases there. I want to be diversified. I probably have more stocks than um, what a lot of people would think is a good idea. I'm usually between like 18 to 23 ish, something like that. Maybe a
in
few
in my
others here and
opinion, that's
there.
not bad. I'm in that same range. I'm just
Yeah,
floating around, I think 24 or 25. So
right. Yeah, and sometimes I'll try to start a position in a stock that I like and hope to accumulate in that region, and then if it runs up 15%, 20% or more before I'm able to really build out the position much, then I'll sell it off and
and take the profit.
take the
It's not
profit and put it in something else, even though maybe I really wanted to build that one out, but it runs up to a point where it doesn't really make sense for me to continue averaging up. So,
right.
that kind of helps me keep it a little lower. But so here recently, I've been really trying to build out my utilities. So I have Duke Energy is one of my favorites. I mean, we actually use Duke Energy here, so
Yep.
I figure, I like the idea of one day accumulating enough shares that the dividends from Duke Energy actually pay my power bill.
Turn that cash register
Yeah,
around.
it's going to take me a while to get there, but so but it is feasible. But yeah, so that's one thing. Here in the last 6 months or so, the financial sector had really gone through a tough period there. So I started a position there, and um, it's a little bit like they've all bounced pretty well. So I'm I'm green. I'm not really accumulating much at this point because it will be averaging up, even though probably overall it's still a fine place to add. But I've just been trying to use other opportunities at the same time. I feel pretty good about the position size. They're still really small. I'd like to get them all larger, but
When you say
so
financial sectors, are you talking banks like JP Morgan and Bank of America or any of those, Wells
yeah,
Fargo?
Bank of America and Truist, uh, which is a North Carolina based regional
Regional
bank.
bank.
So it was really high before all the stuff with Silicon Valley happened, and so
Right.
it got pushed down really far. Still feel pretty good about it. It pays a really nice dividend for what it is right now, but hopefully has opportunity for growth as well. So I mean, I'm still trying to have a growth mindset, even more than just dividends. I'm trying to find companies that do, like you said, increase their dividend, um, but and we'll
Also
have
have
the
potential
growth.
for capital appreciation as well.
Exactly. Yeah, exactly. So, um, but for the most part, I'm strictly dividends, but I do have exposure to, Amazon and Google and a
Some of
little
the
bit of
tech.
some growth there. Yeah.
So just to the banks, being Canadian, it feels like I have to mention the Canadian banks.
I have a few on my watch list. I haven't made an
We haven't
entry
pulled the
point
trigger
yet.
yet.
Yeah. But I've
Which ones are on your watch list?
let's see. So I'm gonna pull it up.
I'm guessing TD.
TD, RY.
Yeah, that's Royal Bank.
Mm-hmm. So those are a couple I have on there for now. Um,
That makes sense. I know TD has a very strong presence in the US. Like you look at Boston and it's called the TD Ameritrade Gardens now. And
mm,
then RY, RBC Royal Bank of Canada. They have a strong presence on the PGA Tour. Is it in North Carolina that they sponsor, or maybe South Carolina? They sponsor. I think it's called the RBC Heritage Classic. If I'm not mistaken, I might be
it
mistaken,
could
but
be North Carolina. I'm not sure. I don't follow golf all that closely, but I know we have, like, RBC does have a good presence here.
right. So not surprising that those two are on your watch list because
Hmm.
something that you would be familiar with. So
I have
uh,
BCE on my watch list too. So there's like a Canadian telecom
yeah, Bell
uh,
Canada.
there. So it's I'd heard good things about Canadian stocks for a while, and really I've like I said I still it's because of the amount of positions I have in my portfolio. I'm trying to be
Right.
selective on newer stocks, but I do want some exposure to other markets as well. And that, the Canadian banks are one that I have been looking at.
Yeah, makes sense. There's 2 that I've been dollar cost averaging into since the start of this year, which is one of the Canadian banks, Bank of Nova Scotia, and then actually BCE, Bell Canada is the other one. Those are the 2 I've been really focusing on accumulating a position on this year. And
Hmm.
for the most part, just by luck, not by anything other than luck, I've been more or less dollar cost averaging down on them every 2 weeks when I get my, paycheck from work, and then I,
Nice.
transfer some money to my brokerage account. And yeah, I obviously I've dollar cost averaged up a couple times over the last 6 or 7 months, but for the most part, it's always been a little bit down, and I'm okay with that right now, right? When you're in
Right.
that accumulation phase.
Yeah, and that's something that's been, so all like the second half of last year and a good portion, a few months of 2023, it was almost always dollar cost averaging down. And then here lately, the markets have done
Rebounded a
better.
little bit. Yeah,
Um, it's been hard for me to. I have VU also, and
right.
so it's been hard for me to try to really buy in much with them because they've run up so far, and it would be, I'm up 20 or 30% in that, and so I don't really want to average up, even though long term it's probably still going to be fine. But
Yeah.
I've kind of backed off of invested. There's still, like, my portfolio is still heavily weighted in ETFs more so than individual stocks. But
And that's okay, right? There's nothing wrong with that.
yeah, there's nothing wrong with it. I wish it was a little heavier weighted, honestly. I wish, like, in October and September through December last year, I wish I had gone heavier in it while it was there instead of picking stocks. But I still feel good about how they're weighted there. But I would like to be able to pour more into VU and VYM than I have been recently. But they're up pretty high from where they were.
Yeah, I definitely get the sentiment there. It's always harder to dollar cost average up than it is to DCA down, right?
Right.
And again, that's definitely part of the mentality and the psychology of investing because again, in 15, 20 years,
Mm-hmm.
are you going to remember whether it was like you know, like I said before, 36 or 41 or whatever the
Right.
numbers happen to be, right? Like
Right.
you're not going to remember 15, 20 years down the road. And
Yeah.
if you have enough shares, you're not going to care either, right?
Right.
Especially so
Yeah. It's pulled back a little bit, so I may start, investing a little bit more into those, just to keep the weighting, you know, pretty even.
right, right. Understandable. Anything else in your portfolio that you'd like to mention?
Uh, I have a couple stocks that have, this other ones that are not, the sentiment's not real good on them too, but I have 3M. Um, and I don't feel too bad about the 3M position just because I got in pretty recently. So I already kind of caught it down near where I hope is the bottom. So I'm pretty
Right,
much break even there. But with what I do for work, we use some of their products anyways. So I work for a manufacturing company, and so we use 3M products and other products that are similar. So I, th- you know, hopefully they'll get past their litigation that they have
right.
going on, and we'll be able to kind of not have to cut their dividend and can start to grow again. But they're not a very popular company on Twitter.
Not right now, but yeah, 3M is obviously a very, very interesting company to look at right now because again, long term, I don't see 3M going anywhere. Yes, they are having some issues with litigation and so forth right now. But like you said, once they get through that, I can't see anything but potentially good things for that stock long term because they make so many great products that so many people and businesses like yourself around the world just depend on the products that they make. So long term, I can't see it being a bad investment. Not financial advice.
Right. Of course.
But with that said, right, like, you feel you might be catching it at or near the bottom, which, of course, we don't know. It could drop another few dollars or several dollars, when markets open. And so it could still bottom out more because nobody can predict the future, and especially nobody can predict the market. But with that said, long term, it odds are very, very good. It's going to bounce back up.
Right. Yeah, I'm hopeful it will. So we'll see.
Anything else in there that's worth a mention?
Um, so I have kind of started to experiment a little bit with, like we were talking about with realty income and being a monthly payer. There's a few other ones that have been popular with, like JEPI and JEPQ,
Right.
pay monthly, and so um, I've I've I have a position in those types of funds too, and it seems like now there's like, a lot of similar types of funds are coming out where it's like covered calls involved, and they pay a monthly payment, and so it may be. I've seen them here recently where it's, covered calls on Amazon or Tesla, and I haven't jumped into any of those, even though they pay, um, really high dividends. Some of them. Um,
Yeah,
I
that's
have
an
I don't.
interesting take too on like the whole idea of chasing higher yields. I do have it's a Canadian one, but I have a covered call ETF in my portfolio as well. And it's
Hmm.
kind of a ridiculously high yield. Um, but I'm okay with it for right now. And
Right.
you definitely don't want to fall into that trap of chasing high yield dividends. You're much better
Right.
off going with just with dividend growth. But yeah, there's always, like I said, those covered call ETFs have that potential because they are selling the covered calls. They have that potential to pay that higher dividend
Hmm.
yield. So, and it sounds like again, Jeppy and JepQ. I mostly just know from what I've seen, on Twitter and from what other guests have talked about here on the Passive Income Podcast.
Yeah, and I think I definitely agree. I hope to, the thought would be to eventually try to get away from any of that, but I'm still trying to have some growth. It's it's definitely higher risk um, than what I think I would ultimately like, but at the same time, I feel like I'm still young enough that I can have some of this risk exposure
Right.
and just kind of see what happens, and if it and also just trying to experiment a little bit and have a little skin in the game as I'm learning, and um, that has been what has helped me. It's funny, I just got a text from a guy that a couple years ago when I had first started investing, he was somebody that I was asking questions of how to read expense reports and how to analyze some of these things, and he told me, I was like, I'll probably lose some money as I'm doing this because I'm investing while I'm trying to learn, because I'll have some skin in the game. And he has a master's degree and an engineering degree, and he said, well, it'll be cheaper than business school. So uh, that, I guess, that has been the case so far.
Right.
It's you know it's it's
That's actually a very interesting point or very interesting analogy that, hey, you could spend 100 grand going to
right,
university to get an MBA, or you could lose maybe a couple grand in the stock market and learn as much or more.
right. Yeah, and so I mean, I have a long ways to go, but I can tell that I've learned a lot and really grown as an investor. And when I have conversations with the same people that I did, a couple years ago, and I'll say things and they don't even know the terms that I'm using, and so that kind of proves that I am growing and learning. But
Yeah, for sure. Well, and we all are, right? No matter, we're all in this, and it's not just in investing, but no matter what path you're taking in life, you should, lifelong learning and trying to better yourself and all that, you know, all
for sure.
those inspirational quotes and so forth, right?
Hmm.
Lifelong learning for sure.
Yeah.
Awesome. A couple more things. For those of you who are still here, definitely want to thank you. We are doing another one of these, giving away the Passive Income Posse mug. Shout out to Patrick over there at buyinvestingshirts.com. So comment below. What should we have them comment below for a chance to win the Passive Income Posse coffee mug?
um, I don't know. Comment wake up.
Comment wake up. Yeah, comment wake up coffee. That's a good one for the Passive Income Posse coffee mug. Comment down below, and we'll select randomly for a winner in a few days, and we'll get Patrick to ship it out to you over to wherever you are. I think he can only ship to North America right now, so anyone in the Canada or the US, um, that's just a quick shout out there. And one more quick thing I want to do here is bring up your Twitter page. So definitely go and follow at tmackwolf on X on X.
Yeah, I don't have dividend in my Twitter handle. I should, I thought about changing it and creating another one, but this is just, you may get some dividend tweets, or you may get NC State football. So
I
you
think
don't
that's a
know.
pretty good combination. A
Yeah.
lot of people, obviously, there's a lot of people that love football, American football, and college football in the U.S. and especially in your area. And yeah, obviously, quite a few people in the FinTwit and DivTwit communities that are great follows, and you're definitely one of them. At TMack Wolfpack on, am I calling it Twitter? Am I calling it X? I don't know.
Yeah, I
Whatever.
don't know. It's going to be confusing for a while, I think.
Yeah. So with that said, thank you so much for coming on this episode of the Passive Income Podcast. Again, thank you so much for sharing about your past as well. I know that's
Mm.
probably not fun to talk about, but um, it's definitely part of your journey and definitely part of what's put you where you are today. So, and like I said earlier, you're setting yourself up for an amazing future. You mentioned you're still Relatively young. Sounds like you're still below 40. So by the time you're,
Just
55 or 60,
barely, just barely,
just barely 40 or
just barely under 40.
just barely under 40.
Yeah, just
And
turned
so,
39 about a week ago. So,
yeah, so 20 years, you're still under 60. And, that's, the 20-year benchmark is kind of that big one in the dividend investing journey where that snowball, really, you really start to see it grow after year 10 and into year 15. And then from year 15 to year 20, it's like you start, well, you just see it happen, right? So,
mhm.
before we sign off, any final thoughts or words before we sign off?
Uh, no, just I appreciate you, letting a an old rookie come on to try to share something. So I enjoyed it. This has been fun.
Yeah, thank you again for coming on. It's been an amazing conversation. I appreciate your time so much. Thank you so much for being here. And if you're still watching, we're trying to get the passive income posse to become my full-time job eventually, so I don't have to go back to that Monday to Friday 9 to 5 that we all want to escape that. So, and I love talking to people about investing and about passive income and dividends. So we're just trying to get there. So be sure to hit subscribe.